Okay, so this is an interactive seminar or workshop, whatever you call. You can interrupt me wherever you want. You can put up questions. Okay, so we are going to make it interactive. We can discuss wherever you feel like, wherever you have some questions in your mind. You can always put up those questions. I'll try to address. This, the formats and models that we have provided, they are only guides. Okay, you can develop those guides, those formats according to your requirement. The requirement of the audit, the particular audit, the assignment in your firm. You can accordingly revise them. You can cut it short. You can make it large, put more contents. So it's up to you. As I said, these are only guides. One thing more, we have not reproduced the formats that has been already prescribed in the ISRs. The reason being that we want our respected members to visit the ISRs. We want our members to visit the ISRs, and also the objective is that something is already there in ISR, so there is no need for reproducing it here again to make it more voluminous. So the need will always be there to refer the ISRs for the formats. So those formats are already available there. Okay, the tables are already available there. For example, for sampling, as far as the sampling is concerned, the theoretical aspects and their schedule is always there. So you can refer those. Okay, so the first part is the pre-engagement. Pre-engagement, now this part has been thoroughly revised if you compare with the last one, because of the, as I already said, the current development in the profession. This part basically comprises of two chapters, chapter 1 and chapter 2. What is chapter 1? Chapter 1 describes the significance of evaluation of client. Okay, so we may have three situations. First, we face with a situation of accepting or declining the new client, right? Second situation could be whether to continue or discontinue with the existing clients. And the third situation could be whether if some assignment is offered by the existing audit client, whether we should accept the additional work or not. So these have been, various aspects have been described in chapter 1, acceptance of new client relationship, continue with the existing client, and the new assignments. Now all these are the requirement of para 26 of ISQC 1. Which says a firm should devise the policies and procedures which should provide for the evaluation of the client for its acceptance or rejection. Then ISA 220 imposes, you see why I have always been saying they are very relevant. Both this ISQC 1 is actually relevant to ISA 220 in the sense that ISA 220 deals with the audit of financial statements, the quality in the audit of financial statement. So it is the responsibility of the engagement partner to ensure that the client acceptance procedures have been followed by the firm in respect of that particular client, okay, with the new existing or the new assignment. So he has to ensure that, and also he has to see whether the firm's conclusion to accept or decline was appropriate in the circumstances. You see, this shows the responsibility put on the shoulder of the engagement partner. So it is the responsibility, he has to ensure that the firm's quality control policies and procedures have been followed and the conclusions arrived at were appropriate. So it also emphasizes the need to apply ICAP code of ethics. And then for the convenience of our members, it moves to the giving various formats, how to evaluate. So you see the beauty of this manual, that it describes the importance, significance, and then give you the formats, how to do the work. So then it describes that prospective client acceptance memoranda, you will find existing client continuation and retention memoranda. So these are the all, very detailed, I would say, evaluation forms, where different information you will gather about your client, and then you will come to the conclusion whether this client should be accepted, whether the existing client should be continued, or the new assignment be accepted or declined. Okay. Now chapter 2, we are still in pre-engagement phase. Chapter 2 deals with the agreeing the terms of engagement on acceptance of audit. Now this chapter has been thoroughly revised in view of the clarified project conducted by ICAP. Why? The reason being that new requirements have cropped up, which are very stringent if you look at. You see, the first thing is that now you have to see whether the preconditions for audit exist or not. I mean, you can't accept a client for an audit client unless preconditions for an audit exist. You have a question, sir? Okay. The preconditions for an audit exist. Now what are those preconditions? We all know. The primary first condition is that the financial reporting framework that have been used by that client is acceptable to us. This is a precondition. The second precondition is that management acknowledges its responsibility of what? Of preparing the financial statements in accordance with applicable financial reporting framework, number one. Number two, understands its responsibility for designing, implementing accounting and internal control system which will result in the financial statement free from material misstatement. Furthermore, the management acknowledges that they are responsible to cooperate with the auditor, give them access to all the informations, the people, okay, and any additional information that auditor may sought. So these are the things that you need to you see how stringent the requirements are. So you need to follow all this. So we have described for your convenience, we have covered in our audit manual. The second one of the same chapter 2 is change in terms of audit engagement. This is very unusual, but since the requirement, we might face a situation where we may be requested to alter the terms of our original engagement. In that situation, we need to see that whether the change is justified or not. So to accept the change in terms of our engagement is a matter of our professional judgment, of course keeping in view the laws, the relevant code of ethics, and our, of course, the ISRs. So normally we may agree to a change if the change relates to generally two things. Okay, the change in circumstances. Circumstances have changed. For instance, the audit is no more required. We were engaged for statutory audit. For example, the law in our country changes that audit below a certain paid up capital in a company is no more required. So the client is now requesting us to change it to agreed upon procedures or review, just to So we might see that, okay, very logical request. They are asking us to change the audit assignment to review or agreed upon procedures or some other. a misunderstanding. Misunderstanding was that we were